This is our Forex blog for June 28th, 2012. And like we do most days, we want to look and focus on buying the strongest currency versus the weakest, or selling the weakest versus the strong. This is our sortable currency meter, which shows you the real-time trend strength or weakness on the top in histogram form. It's made up of 5 different statistical tools. 3 of them measure the direction, 2 measure the intensity of the direction. So right here, when the yen is going up versus probably 80 to 100% of the pairs, and doing so with 100 to 250% intensity, you're going to see those pegged at 100% there, and that's extremely strong currency. It's very likely to continue trending later after a little bit of a small pullback. Underneath that, we have the 15-minute trend, hourly, daily, weekly, and monthly. I pretty much ignore the monthly, and the more the other time frames line up with the real-time strength, the higher your odds are. So you want to find a weak currency, since the yen's always on the bottom, to sell against the the yen. The Swiss is extremely weak. I don't happen to leave the Swiss yen running all night. You can also see the CAD is extremely weak from around 8 o'clock or so onward. So is the New Zealand. At least the real-time 15 and hourly is weak. The weekly and monthly trend is actually up. So that's a little bit lower odds trade than maybe the Australian, which isn't quite as intensely weak, but more of the time frame trends are down. I'm going to try to stack the deck in my favor. Also, the CAD on all the time frames except the weekly is pretty much down. So let's take a look at that. Part 1 of our 3-step Forex trading system, and I call it the easy 3-step Forex system because 1, we have you focus on the best currencies that we feel are most likely to continue trending. So if they do, you're more likely to catch a bigger win. If it doesn't work, you're more likely to have a very small loss or break evens in many cases. The key to trading is obviously have as high a winning percentage as possible, but also have much bigger wins than losses. So the CAD's weak, the yen's strong. Part 2 of our system is bringing that chart up and look for sell signals. So here is the chart. You can see the real-time momentum here. The sell signals started earlier in the night, and you can see it dropped, it fell. Even if you waited for the trailing stop to get hit before you went short at 77.50, you got out of this trade at 21. You made 30 pips. Short again here, made a little bit. Short again here, pretty much broke even, made a little bit. Shorted against here, made 15 pips, and so forth. And then you shorted here, probably lost money on this one. And the trades that are less likely to work, I color code darker red or darker green. It's a lower odds trade. It's up to you whether you want to take the trade or not. You always want to look at the real-time momentum first. This one came down, came down, came down, had 3 opportunities to go lower, and then on the way up it had almost no momentum to the upside at all. If this went up and this strength here was at the 80 level or higher, you definitely would not in any way want to take this trade here. But because it went up with very little strength compared to the extreme weakness earlier, you definitely want to take that trade. Plus this trade here and here, when you have this kind of momentum, the 15-minute trends down, the hourly trends down, the daily, weekly, and monthly trend of all down and pretty intensely weak, it's pretty much a no-brainer. One of our other tools that can improve your odds that we just released this week is our volume profile. I mainly use this on a daily chart. This was the previous day. First of all, there's a couple days going sideways. We had a pullback day, 2 days up, and notice the big line in the middle. This is a point of control. Underneath that, you want to focus on sells, above that buys. And today it wasn't able to get above the value area high. The value area, the other 2 lines, is where about 68% of the trading activity of the previous day happened. When it's underneath the value area low, it's more likely to go lower. You can see the low of the day is down here at 77.40, but the value area is at 58. So you can basically look for sells more aggressively at 77.58 with a pretty high probability it's going to go below that bar's low. So 77.58 is right about here, and the price was above there, came down, briefly went underneath it. We have some sell signals right here. It broke down again. It also broke the 10-day moving average. And if you wonder why this first trade was such a big win, it's because it broke the value area. You will frequently find the first and sometimes second time an area gets broken, you're going to have a big drop. Usually 20, 30 pips, sometimes 50 or 100. And so it broke down underneath there, and then it went up. You have a sell, went up, and this is another tool I'm about to release. which I now have the ability to draw oscillators in the panel on the bottom. And let's just add the buy-sell signals to this chart. It doesn't have the real-time momentum tool on here, but a lot of traders get into trades too soon. Notice this trade right here. The market hadn't really come up too much off the lows right here. When the market gets to the upper 2.5 area, this is what I consider is a decent enough pullback to safely sell again. So you miss this 15 pip move here. You missed a 5 pip move or break even or small loss here. But when the market has a decent enough pullback after having gone down, this is a great place to look for sells, and you can just simply, if you want to, wait for the trend line to get broken and go short. And you always want to draw your fibs off the high to the low. Just, your ideally entry place is somewhere around the 38 to 50% level, which in this case it is. So it meets a couple criteria. It pulls back almost 50%. You got some sell signals here. The market has reset itself for a very likely next wave down, and you got your profit targets ahead of time. If you sold that at 77.40, went all the way down to 80, nice 60 pip move. And keep in mind, if your losses are 6 to 8 pips or even 10 pips, a nice move like that gets rid of a ton of losses. So these are some of the things I'll be releasing. The Fisher oscillator can help traders wait for a little bit better and more decent pullbacks. And it also oftentimes can help you pinpoint the lows. Here's the euro dollar. A lot of people have heard of divergence trading. And divergence trading basically means when you make a lower low and the oscillator has a higher reading, it's likely to reverse. You can see in this case here it didn't. It pulled back and made a lower low again. The oscillator reading value is even higher than before, which is obviously higher than this, and you got a nice 40-50 pip pullback. And when a currency's gone down a lot, one of the reasons that these sells here, I put all of the sell signals on the chart, but you're better off waiting for a decent pullback before you start looking for sells. So if you see some sell signals here, then the market works its way up to this area here, you can certainly look for a sell, look for a sell, look for a sell, and you can see it pulled back. You always want to draw your fibs off the low to the first wave up. A two-wave pullback is much better. This one's pretty close to the upper area. You could have maybe made 5 or 10 pips there. You got short again here, made 15 pips. Actually, you can see the trend pulled back down another 40 pips. So getting short near the upper getting short near the upper overbought area on the Fisher oscillator can dramatically help you wait for a decent enough pullback before going short. Now, a lot of people are familiar with MACD, stochastics. Let me just put the stochastics on here. I've never taught, nor do I like the stochastics, but one of the reasons I don't like it is because it always shows overbought, oversold all the time. Notice, right here, 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 it gets overbought, oversold way too fast. Earlier it was oversold right here, and the market continued trending down another 80 pips. At least, our tool waited until here for the oversold condition. And this is one of those things where it just kind of gradually went down bar by bar, just really slowly. Most of the time, it takes it significantly longer to become overbought, oversold than the stochastics tool. And that's why I don't like the stochastics. Notice this one showed oversold right here, and then the price fell. Whereas the other one started to show oversold all the way down here, which is pretty much near the bottom of the move. So I hate the old 1970s indicators that people invented back when computers had punch cards and they can't do millions of calculations a second with no problems whatsoever. This is a very complicated, very mathematical indicator, and it's, in my opinion, vastly superior than most other ones, and that's the only reason I'm showing it in the blog video today. So let's look at one more example. We'll go back to the currency meter. Find another one to buy or sell. You can clearly see earlier today the euro was extremely weak. The dollar was strong, and of course the yen was strong. So let's take a look at the euro dollar. Just down, down, down. And one of the trades I noticed today that kind of bothered me that it didn't find was this little pullback right here. And that's why I made a change to my code, and you'll have that in the next day or two, that identifies this kind of pattern now. And when it finds this pattern, it gives you a sell signal. But also notice up here near the high, let's say you draw your fibs on a previous wave up, it gets up to the fib targets, you have a cross, you can wait to do counter trend trades at the highs or the lows. You're waiting for the Fisher oscillator to cross first. So you're short right here, go sideways on you, never put your stop above the swing high, never stopped you out. And you pretty much got into this huge move down, pretty much at the top tick, by using the Fisher oscillator. Let's look at another currency. You can see that New Zealand is quite weak today, but however, keep in mind the daily, weekly, monthly were down most of the day. The weekly shifted down at 9. I'm sorry, the daily trend shifted down at 9 here. You can sell the New Zealand dollar or sell the New Zealand yen. And I'm going to bring up, a really simple chart, just a 5 pips per bar chart with our oscillator and our buy and sell signals. So when the oscillator is oversold, you probably want to avoid some of the sell signals. This one makes a decent sized pullback. It's very close to, or at least it's above the zero line. It made enough of a pullback off the lows that you can consider this. You skip this one because it's in the middle of the range. This one is at least above the zero level. It made it somewhat of a nice pullback. It's not at an extreme level. But if you just simply wait for a pullback above the zero middle line, or preferably the 2.5 level, you can get into this trade here. You would have skipped that, which did work, and you got into here, made money on that one. And this trade right here is a sell signal. If you see a sell signal and then the market goes up a little higher and then you get a cross, you can certainly sell at a higher price. That's advantageous to you. And you can see that trade pulled back about 30 pips. Let's put the New Zealand yen on here. Let's first take a look, and when this is up here near the highs and it's going sideways, notice when this flips down, right here. Gets you into the trend real early, although it didn't crisscross back and forth up here. The green, it was pretty much above, and then it flipped. It was a clear signal. The market goes sideways and then collapses. Now this signal right here, the market's a little oversold. You might not want to take it. You wait for this one right here. It's had a little chance to reset itself. It goes down. This trade right here, it's kind of right near the middle line. You pass on that one. You have some sell signals here. It gets right up to the extreme level. You sell it. You have a good chance of making 15, 20 pips there. So on this one, looking at the daily chart with our volume profile, gives you a little bit better. You can see that this one, kind of most of the value area was near the low. This is the high area, the value area, 62.98, pretty much 63. The point of control is at 62.75, and then the low is at 62.68 or so. So 68 was the lower part of the value area, which is right around here. You can certainly look for sells, but once it breaks the value area, you're very likely to get a breakdown, and the previous day's low is quite a bit, a few pips underneath there, 10, 15 pips. Once it breaks down right here, you can see it went down, went down, went down, went down, went down. And this one, when it's at that level right here and about to break down, it is above the zero level, so it did pull back a little bit off the lows. The oscillator value I would prefer to be up here. That's the safest trade, and you can see it pretty much immediately went your way. So this is going to be released probably maybe Monday, maybe late Friday, just so you can add it to your charts, and it will help traders that have no patience, no discipline, wait for deeper pullbacks before taking the signals. You still want to use the currency meter to find the strongest and weakest ones. You still want to wait for buy and sell signal. But now you just add one more thing to it. You wait for a decent sized pullback. Unless it's at the beginning of a trend. If it just breaks down and makes new lows and you get a sell signal, take the first and second sell signal after that. But after it goes down a significant number of pips, 80, 100, 150, wait for a decent pullback using the Fisher oscillator.